Going on Discord and YouTube family, and welcome back to another edition of Market Review with me, T. Hobbs. Uh, Today on the channel, we'll be discussing the S&P 500, the Dow Jones, and the Nasdaq. On the screen, what you see is a screenshot of one of the trades I took on the day. One of my really nice trade. I'll discuss that, but I just wanted to start by just saying, like, hey guys, like, trading isn't easy. This journey has taken me almost 3 years to complete or work through. I'm nowhere near completion, but I'm getting better every day, right? These trades, a lot of people will view as like home run trades, right? But I've studied, I've done the work, right? And I'm very confident when I put these trades on. So if trading is something that interests you, right, and you're struggling in your trading, the Trader Shop it's my Discord, and you're more than welcome to come in there. And if you're willing to learn, you can definitely get a lot better with what you're doing right now. So that being said, let's get right into the video on the market review. Let me go ahead and share this other screen here, and we'll get started with my pre-market plan. All right, there we go. All right, so the weapon of choice for the day was the Nasdaq, right? The Nasdaq 100. It's kind of like my baby, right? Like, it used to be, it used to be the instrument that I traded every single day. Now I switched over to the S&P, I switched over to the Dow, switched over a little bit of gold, came all the way back to the Nasdaq because I just love it. I love the way it moves, right? It's like that we joke in the shop, but it's like the crazy ex-girlfriend that you can't get away from, right? So I'm back. You know what I mean? She beat me up a little bit, but I'm back, right? So what was my plan on the day, right? It was quite simple. We started by looking at the daily chart, right? We took a look at the daily chart as usual. This is what we do every single morning inside of the Discord for the pre-market plan. So the daily chart, we understood that we were in an uptrend, right? We based out from here. The uptrend started on Wednesday, April 9th. We came back down and retested those lows, validated those lows with a basing candle, rallied above that high, and then gapped up from that area. From that gap, we haven't returned to close that gap. A lot of people will be looking at this gap today, and it's one of the things I talked about, as an area of interest. They're going to try to short down to this level. The market knows that. I know that. It's like common information, right? So what is the market going to do? It's going to target max pain, right? Who is in pain? When you look at this situation, everybody that was selling the market since Monday, April 21st. Remember that big sell-off we got where everybody was, manipulated into believing that we were going lower? Well, everybody since that day is underwater. They've been underwater on Tuesday when they gapped the market up a ridiculous amount of points. They're underwater that day, right? And then they're definitely underwater going into Wednesday, Thursday, Friday, right? So what is the market going to try to do? It's going to try to get them to close their positions by pushing price higher. So that's the thesis behind the uptrend and where max pain is. So if I'm looking at levels, I know that I want to see the market trade above 138, which was yesterday's high, right? Or 165, which was yesterday's high, right? So that was my first target on the day. And then I wanted to see the market start to mitigate into this supply zone here at 19,267. You can see as the market's currently pushing, we're starting to push into mitigating that level. And ultimately, my final target was in the 400s on the day as we approach monthly settlement. So that was my thesis on the market. So let me break out my pre-market plan. And again, we go through all these steps that I'm doing on the review is the exact same steps we take every single morning inside the Discord. All right. So the conditions, we were in a bearish retrace of a bullish trend. The trend was bullish, right? Which we just discussed very thoroughly. The trend was bullish coming from Monday's low, right? So if we're bullish coming from Monday's low, then we're continuing bullish. We're just in a bearish retrace, right? Starting the day. And a lot of people see this and they want to get short. It's not I had no plan to short the market until we got up here. Okay? We were bullish as long as we stayed above 18,594.75, which was this low that, when we swept the previous day low. We were bearish as long as we stayed below 19,165. And you can see we got above that level. So we're no longer bearish. We're bullish, pushing above into the next dealing range. The macro, the gap fill will happen at some point, which is this gap here. However, as long as we are above it, we will try to push higher. To continue to be a bear, I want to see price trade but back below the previous day low, which it never did, right? And then look to target the previous PM session range, which is down here. I will continue to have this on my chart because it will get mitigated. We will come back through this area and we will fill this gap. So I leave it on my chart because at some point we're going to get down here and a lot of people will just forget about these levels. I'm not going to. Okay. So what was the plan? I was looking to trade the lows of the PM session range, and that level was between 18,839 through 18,735 at the lows, right? And then the highs was 19,106.75, right, through 18,996.75, right? So essentially, I was looking to trade long off the green box, trade short off the red box, understanding that the bulls are in full control. So unless we were looking at this being a range, I was definitely looking to go long, right? Targeting previous day high, these wicks up here, right? And if you guys see the thumbnail, you can see that my target was 255. And like I said on my post earlier today, we definitely were going to hit my target. I just was trailing aggressively after 100 points, and that's kind of my system. So I was completely comfortable with taking, over 100 points out of this market today. I think that we could continue to make that push in the monthly settlement, this red line here. And then the next area I was looking to actually take a short, which probably won't come into tomorrow. I'd be looking for shorts between 19,491.25 and 20,042, all the way back up to our weekly projection. Our data projection on the week bullish is at 19,905 through roughly about 19,491. If none of that makes sense to you, you got to join the Discord to find out exactly what I'm talking about. But we go through all of this stuff in a top-down analysis format on Sundays, which I post on the channel as well. So let's come down to the 15-minute chart and I'll discuss kind of what I saw on the trade. And I took 3 trades, just like yesterday. I took 5 total trades yesterday, and I posted the best one, right? Like, obviously, because people love to see you lose big and they love to see you win big. My losses weren't big, right? But my win was. So I posted the winner. Doesn't mean that I didn't take more trades than that. I'm going to be transparent and tell you I took 3 trades before taking this, banger trade. But my thesis never wavered. I was always in the longs, right? I just was getting afraid that that I was wrong, and I would stop myself out for either a small loss or small win. Okay. So where was my first initial trade? My first initial trade was here at these lows, right? At 18,748. And you're like, Hobbs, why did you cut this? It's because of this candle right here, right? This 815 candle scared the living bejesus out of me. It came down like the right hand of God, and I just got scared and I cut it. And then I immediately regretted it. And I ended up getting back long right off a settlement. And this one I talked about in the Discord. I was telling them exactly where I was getting long. I got long somewhere in here off a settlement. I got scared again with this little ridiculousness, right? And then I got long. I took 4 trades. I got long again off of this breakdown right here, right? And I was super happy with this entry. And for whatever reason, I cut it because I think it got super wild. And then finally, I re-entered again, not losing a lot of money whatsoever, like not at all. I finally re-entered at the daily fib at 18,892, and that's the trade you see on the thumbnail. I entered here. I accepted the full risk. I was kind of out of the woods at this point mentally. I accepted the full risk. My stop was below 845. I was in 10 micros, so that trade was well managed. And then my first target was 165, which I didn't hold to. And my final target was 255, which I also did not hold to. However, I did nab 170 points on the trade. I think I got out at like the 19,000 or something like that. It was a really clean trade, really proud of the trade. But again, I want to be transparent when I say, like, I did take multiple entries, but I wasn't cutting them because I was incorrect. I was cutting them because I was just afraid, right? Shaken out of my position, right? I'm still working on that. I will always be honest about that. Like, I'm a work in progress. I'm not a finished product, but I do understand how price is moving, and I'm very comfortable with the way that I trade. So let's go down and let's go down to the 1 minute, and I want to follow price so you guys can see exactly what I was looking at from the open. So the first thing I like to do is I like to enter once price is below midnight, right? Like, whenever I can get price right below midnight after making a new bottom, I mean a new high, I really love that. So if you look down here in the overnight session, like price doesn't start, contrary to popular belief, price action doesn't start in the New York session, right? It starts at 1800 the previous day in the Asia session. And then London usually brings the low of the day. So if we look down here, what did we get? We got, London 450, opening is at, I think like 3 o'clock, 3:30 or something like that. But anyway, it doesn't matter. The low of London was down here, right? Now, a lot of people, they'll say, well, I'm targeting London lows for a short. It's like, I mean, yeah, you could do that. But remember, this is a high, this is liquidity. This is a high, this is liquidity. This is a high, this is liquidity. And this is a high, and this is all liquidity. The market ran through all of this before you even woke up to trade New York. Why would it then, right, after making a brand new high up here, why would it come back down here to let these traders out of the trade, right? Sometimes you got to think about the market in a diabolical sense, right? Like how big money is thinking, right? Big money is not going to let these traders out of their positions at the open. Instead, it's going to try to cause and put more pain on them so they're forced to close. So when we came down here, this was a higher low structurally, right? Like that was contextually, but structurally, this was a higher low right here. So that's why I was looking to enter, right, and continue this trend up. Now, usually I don't do well with these type of trades. So maybe that was a reason why I was very nervous when I got in the trade and ended up cutting it, right? I was entered like right on this candle here, right? So I like to be entered as a reversal trader. I like to be entered from here, but I wasn't awake, right? I didn't get up to trade it. So usually I do better. I don't do well with these trades. And like I said, maybe that's why I cut it. But again, it ended up working out. So I'm not really worried about it. So, but if we continue to follow price, right? Well, what did we do from this moment forward? We made a new high, right? Up here. Once this new high is established, the market's going to do one of two things. It's either going to go into a period of consolidation, right? To move higher. It will retrace to come back down to the lows to move higher, right? Or it will kind of sweep all of this and retest this low to go higher. Notice how all of the outcomes are the same. It's trying to move higher, right? So if we know that about price action, then our job as traders is to just get the best price with the current conditions. The current conditions were a new break of a high, right? And consolidation right before the New York Open. And then price ended up taking off before the New York Open, and then it did the same thing. And this is the cluster that scared me out of this position. I ended up getting back in here, obviously a little higher, but I knew price wanted to go higher, and I would have been absolutely livid if I allowed price to leave this area without getting an entry, right? So I was completely okay with the late entry, the longing what some would consider the proverbial high at that point, but it wasn't the high in my book until we left this chessboard, because clearly look how much meat was left on the bone. The market ended up going up almost 300 points from this area. So I'm completely comfortable with taking the later entry, right? But as we continue to read price got a little bit of a choppiness right here. And honestly, I temporarily thought about cutting the trade, but then I zoomed out and looked at the 4-hour candle and I was like, nah, I'm good. I'll hold until this 4-hour candle closes. It was a good trade because it was a good idea because I did hold until the 4-hour candle closed. I ended up closing inside of this 4-hour candle right up in these highs right here. It was a really decent trade. Could have got full target. Full target was 335 points, but I'm never going to be happy. I'm never going to be upset as long as I'm getting, I try to go for at least 100 points a day on the NASDAQ, right? Which I think is like 400 ticks or something like that. I'm not sure. But anyway, that was the breakdown for the S&P, the NASDAQ. It was pretty cut and dry, right? Like you just have to figure out which way price is going and just stick with that bias, right? Like, and it's pretty easy to read when you add the context to it, which a lot of people don't do, right? But if we're looking over here on the S&P 500, it was the same thesis. Not going to break it down too much. Whenever you see that previous day low sweep, weekly fib sweep, and we immediately buy back up and then we get back on top of it right here, like this was key right here, right? Like you can't, if you don't have these levels, I strongly suggest you draw them out, right? Weekly fib, 50% of the previous weeks, the previous day low, the session low, or the previous day low of the candle. This level is going to be important because it's an identifier that's saying we're going lower, right? But if we buy it back up immediately, right, we sweep the low, then we're going to go back up and take out that high. You can see that's exactly what we're doing. This could be a sign that we're about to trade lower though, because the S&P 500 definitely closed below the previous day low. So once we take out that high, we might be coming back down, and Google reports here in a little bit. So it wouldn't surprise me to have this market come all the way back down to mitigate this gap after everybody's been trying to short it all day. And then, they short it when they can't participate. But anyway, we got the same type of price action. We got above the low of the chessboard, which is the green box. If you guys don't know what a chessboard is and you're interested, like I said, link is in the description below for the Discord. I'll explain it all if you get in there. The low of the chessboard was reclaimed here. I probably would have been looking to get long off the open at 54.04. Very nice entry here, and then a rally, much cleaner than the NASDAQ too, by the way. The NASDAQ was crazy up in this area, but very aggressive rally, push right to the daily fib, and then again into 54.99, which would have been my final target if I was trading the S&P 500. So another very, very clean setup for the S&P 500 today. And then there was the Dow Jones, which in my opinion did exactly what I wanted the other instruments to do, right? And it's a sign that the other instruments will follow suit. And what is that thing? Remember I talked about in the previous breakdown of the NASDAQ, this range from Monday has been unmitigated. This gap, right, has been unmitigated. Well, the Dow Jones closed the gap and mitigated the range from Monday or from Tuesday, right? This is exactly what I wanted to see happen inside of the other instruments. They're just a lot stronger, so they're not coming down as low, right? The Dow is very, very weak right now because of United Healthcare, Procter & Gamble. These instruments are really bringing the Dow down. So it's really struggling to find liquidity. So it's got to trade lower so it can go back up, right? It gets that mitigation inside of London lows, right? We get back to the top of the chessboard, and then we rally above. We reclaim New York AM and London Open and midnight all at the same time, right? Once we get back above here at 9:30, like you trade down into 9:30, it's ball game, right? It's longs all day long, right? Trading back up, you get a little bit of a mitigation here at the high, but the bulls completely hold this level and then get back above the daily fib. And again, the only thing you couldn't do with the Dow that you were able to do with the other two is because it was weaker, it traded lower, so it didn't go to previous day high, which is telling me that the true structure just might be to the downside because of how weak the Dow Jones is. Like they usually all, follow suit, because one thing that they all have in common, they all made new lows. The NASDAQ barely, the ES definitely, and the Dow Jones definitely. So we'll find out, I think probably toward Google earnings, exactly what direction we're ultimately trying to go in. But right now the bulls are in control, and we're just going to continue to play that trend every day until that trend is broken. So additionally, I did take trades on the gold. And if you give me 1 second, I can pull that trade up. Last night I took trades on gold, and I post all my trades as I enter them. I post them inside of my Discord, right? And I let the Discord know, like, hey, this is what I'm in. But this was the other trade that I took. So I was riding a little bit of a cushion going into the day. This was a 10 micro trade on MGC. My target was daily fib and then 3309. This was a late night trade and I was doing homework. So as soon as I got done, I ended up closing the trade at the daily fib for about 37 points. Very nice, very clean, very easy. Same type of thesis. I use these chessboards. It's my model, right? I made it up. Nobody else can claim it, right? But it's my model. And if you guys are interested in that, feel free to hit the Discord link and join the Discord. I will not put those videos out on the channel about the chessboard. They're only exclusively in the Discord. So if you guys want that information, join the Discord. Like I said, it's very cheap for now. It's $40 a month. We'd love to have you, but you got to be willing to work or you won't learn anything inside of the Discord. That being said, my name is T Hobbs. This is the market review. I hope this has been helpful to you guys. This is a Trader Shop. We'll catch you guys on the next one, man. Peace.